What's up, everybody? Good evening. How's everyone doing? And welcome to the stream. Welcome to yet another FOMC meeting stream. We're going to be watching our beautiful friend Jerome Powell at the Federal Reserve. We just already got the interest rate decision, as was already known. Dropped down to 4%, which was also completely priced in and just in general okay. It's fine. I mean, we got some volatility, as you can see right here, but ultimately it's okay. I mean, not much has happened. We did get some volatility going into that, which was also to be expected. Although I must say that the bearish momentum we saw from Bitcoin, like in my middle of the day market update, I said that, right? I said, okay, I think we can spike down a bit lower, but I thought we would find some support a little bit higher. But okay. Let me quickly let everyone know that we are live. And then we're good to go. I mean, the speech is in about 9 minutes or so. So then we'll tune into the stream, or we'll tune into the speech, and then I'll tell you whenever anything interesting happens. We'll talk a little bit about markets, and we'll talk a little bit as a community, of course. Everyone, how's everyone doing? Is everyone having a good week so far? Markets have been kind of up and down. I mean, we've had some great moves since last week Friday, of course. But then if you take a look at the last 2 days have been quite bearish, or at least like yesterday was quite volatile, and then today has been bearish so far. I think we can turn it around, but we'll talk about that, of course. But at least it's been up and down. The weekend was great. Friday last week was great, but this weekend I was booked full with birthdays, so I did not do too much regarding the markets. Okay, quickly posting everywhere that we're live, so you might get some notifications right now. Can I do this? Yes, okay. Nice volatility here. I mean, Bitcoin had some volatility over the last hour as well. Quite high volume, but it's neither bullish nor bearish, I would argue. Okay, it's posted everywhere. We're good to go. How's everyone doing? Welcome to the stream, everybody. Almost 200 viewers. That's great. Daniel, welcome to the stream. Good evening. Glenn, welcome to the stream. Truls, welcome to the stream. Not doing a marathon. I'm still recovering a little bit, to be fair. I mean, I don't want to sound a little bit like a P word, but my knee is a little I don't know. Not great. Kian, welcome to the stream. Tiny Toots, welcome to the stream. De Krieger, goedenavond. En welkom bij de stream. Maurice, welcome to the stream. Quran, welcome to the stream. Zaid, Father, welcome. So we're in this live stream. Welcome everybody if you're new. Sasha, welcome. The greetings from Belgium. That's always great. But we're going to be talking a little bit about the markets. I mean, the price action right now is a little bit, I don't know. It's not great, to be fair. But you can see if you look at the 4-hour time frame, like we basically filled the entire CME gap we had over the course of the weekend. So all the price action that we had over the course of the weekend was reversed. But as long as we're holding that, and the CME gap is also confluent with the value area low, and with the 0.618 fib, like constructively, if you look at the daily time frame and you think this is a range, I would still say we're going up to the top of the range. So not that much has changed. And the short-term price action, yeah, it's not great. We fell down below the 7-day rolling VWAP right here. It's not amazing, but it's also nothing we cannot get back from, right? I mean, we could just as well in the later part of the evening, we could reclaim the 7-day rolling VWAP, and before you know, we're back at 114,000, and we're all good. P Gamer, welcome to the stream. Glenn, we'll talk about Hedera in a moment. Biocoder, welcome to the stream. Down on Bitcoin in a trade or in a spot position? Because honestly, I mean, when we're talking about the markets, Bitcoin is still holding on relatively fine. Vlogs by MTS, welcome to the stream. I'm feeling pretty good. I'm a little hungover, to be fair, which I know that sounds strange, because it's a Wednesday, but I had some drinks with friends yesterday, and I slept like 5 hours. So then the hangover also gets it becomes a little bit worse. Johnny Mac, yeah, we had a rate cut of 25 base points. I almost have to look up the stream in a moment, guys. Otherwise, we will not see it. But we had an interest rate decision. We had a cut by 25 base points. That was already priced in, right? I mean, a lot of people said that already. That's completely true. That's already priced in. I would even go as far as saying that a rate cut for December is already priced in. Druids Brew, welcome to the stream. Mohammed, welcome to the stream. Tristan, welcome to the stream. Lucid, welcome. Thank you very much. I appreciate it a lot. I mean, it's always great to hear. It's I also get quite a lot of quite a bit of hate, but ultimately people like you are what I do it for, and I mean that sincerely. And yeah, those XRP updates, they're great. I love doing them. XRP, to be fair, I think even if you if you hold XRP long term, I understand. But if you want to get into a little bit more like day trading or maybe even swing trading, I think XRP is great to trade. It's quite good. Cliff, welcome to the stream. Daniel, a marathon is always the same. It's 42 kilometers. GVV, goedenavond. Welcome to the stream. Gagu, welcome to the stream. Fix, goedenavond as well. Maruti, welcome to the stream. Nicola Davies, welcome to the stream. Antonio, welcome. Alcoholic, welcome back. You were also in the previous live stream, as I remember. Kiki, welcome. Crypto investment, welcome. Yeah, I mean, it's look, I'm not that old yet, but those hangovers are starting to get a little bit worse. Orto Chap, welcome to the stream. Welcome everybody. Matic, welcome to the stream. Eldorado, welcome. John Ellis, update on the ETFs. I don't have a major update yet. I mean, I'm waiting for the inflows to come in. I spoke about Ethereum, Solana, of course. And the Solana inflows are amazing, but we don't know about the inflows about Litecoin and Hedera yet, right? Juan Fe, welcome to the stream from Uruguay. Great to have you here, man. Dave Amini, I'm not certain. Aster is still, the news about Aster is amazing, but the price action, meh, it's not good enough. Jessica, welcome to the stream. Fraimibo, not yet, but welcome to the stream. XRP Prodigy, welcome. Welcome, everybody. If I missed you, I'm sorry. I'm very sorry. Bert, welcome to the stream. I'm not sure, Bert. Maybe it could be. It could be time for Timmer Frans. Yeah, Daniel, it was nice. It was nice. It was a long run, but ultimately it was nice to do. Okay, I'm going to look. Aster a con job? I don't think so. I mean, I really do think that Aster. Look, I think there were a lot of insiders in Aster, and I do think some shady things happened with it. But ultimately, a con job, I don't know. I still think like some sort of a bigger rally for Aster is possible. I mean, for example, if my apologies, if for example Binance comes back to the United States, right, which is a realistic scenario, then we could see a BNB ecosystem rally again. The BNB ecosystem right now is not doing too great, or at least there's not a lot of momentum like we saw back in September and October. So if that returns, I still think Aster is fundamentally one of the best projects on BNB right now. If you look at the TVL, if you look at the revenue, but ultimately that's not enough. And until we see bullish confirmation for Aster, which at this point in time we haven't seen, I would stay away from it, and I would much rather just watch from the sidelines, keep an eye on it, but wait for some strong confirmation and then act upon that. The speech is almost starting. Here it is. We will watch it live together. I'll give you my thoughts on it as we go. I don't want to have full screen. I want to have the theater mode. Yeah, can I have that? Yeah, thank you very much. And I want some subtitles. I want to have a background color, and then I want to have font color yellow and a little bit bigger so everybody can see. 200 is good enough. 200% is good enough. I hope so. Yeah, so that's... Oh, we're starting. Okay, so the idea is that we'll watch this together, right? Because the press conference matters. The interest rate was already priced in. This matters much more. No, I'm not French. I'm not Spanish. Guess again, John. What am I? I am European, but not a little bit higher. A little bit higher. The good part of Europe. I'm just kidding. Okay, I hope so, John Ellis. Quantitative tightening, if that's being called. Okay, I'm going to shut up for a moment.
Goals of maximum employment.
We'll watch this together, and whenever he says something interesting, I'll tell you, all right? And we'll take a look at the price here and there as well. That's the idea. Let's go.
Shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments.
His thoughts on monetary
Available
policy
indicators suggest that
so we'll
economic
watch for
activity
that.
has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households'
bullish.
perceptions of job availability and
Little bit
firms'
bullish,
perceptions
I'd say.
of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures.
Minimal.
Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
En ik ben niet Brabants.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks.
What did I miss?
In the committee's
Moved down?
discussions at this meeting,
Look at
there
this.
were strongly differing views
What did I
about
miss?
how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December
look
1.
at that.
Our long-stated
Look at
plan
that.
has been to
That's
stop
not amazing.
balance sheet runoff when reserves are somewhat above the level we
He
judge
is,
consistent with
he's-
ample
he's
reserve
pushing
conditions.
back the hopes about another
Signs
rate
have
cut
clearly
in
emerged
December.
that we
That
have
is what
reached that
happened.
standard. In money markets, repo rates have moved up relative to our administered rates,
But
and we have
honestly,
seen more notable
I don't know.
pressures on selected
I'm not
dates,
bearish on
along
this.
with more use of our standing repo facility.
A bit of a spike down is not,
In
it's
addition,
not the
the
end of the world.
effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see
It's low volume.
as the size of
It's a
our
low
balance sheet
volume move.
declined
Relative-
and warrant
relative.
today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time,
Okay.
while reserve balances continue to move gradually lower as other non-reserve liabilities, such as
Slightly
currency,
bullish,
keep
maybe.
growing.
Slightly bullish. That's QT.
We will
That's
continue
QT
to allow
ending.
agency securities to run off our balance sheet, and we'll reinvest the proceeds from
QT
those
ending,
securities
Right, that
in
has to do
treasury
with
bills,
quantitative.
furthering progress toward a portfolio
Boris,
consisting
get out of here.
primarily of treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock
Look
of
at
treasury
this.
securities,
Beautiful.
thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans.
Okay, so that's the end of the speech. We're going into the into the questions. That matters as well. But ultimately, I thought the speech was a little bit double, right? I mean, we pushed down because he said that another rate cut in December is definitely not a given, right? And the prediction, the expectation for December was that we were going to get a rate cut, right? We had like an 85% chance that we were going to get a rate cut in December. He said it's not certain, so that pushes the price down. But ultimately, there were some positive bits and pieces in there as well. So I'm not sure if I fully trust this move to the downside. It's a little bit of an overreaction, I think. But okay, and for all the Dutchies, I'm from Amsterdam, or at least close to it, but I live there right now. All right, let's listen to some of these questions.
Works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence
That
of
move is
adjustments
hard.
and waited
That move is
to
very
gather
hard,
more
what we're seeing right
information?
now.
So
It
the
looks
way
like a little
we
bit of a liquidation move.
have been thinking, well,
I
I've
don't
been
know.
thinking about it is the
I don't know.
risks to
It
the
doesn't
two
look too
goals.
bad, to be
For a
fair.
very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire.
I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right?
I'm checking some other things
they'll forecast faster or slower progress on one or the other, and they also have different levels of risk aversion.
I have some other things to check out as well.
Some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings,
I'm trying to keep my focus on
participants go out and talk. They're very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that it's a fact that we don't make decisions in advance. But this is, I'm saying something in addition here. Is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened. Some things have been happening for some time now, showing a gradual tightening in money market conditions. Really, in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because. Again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby.
Thank you. Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that...
Look, let's talk a little bit. I have to do some other things, but ultimately, if we're talking about the markets right now, I don't really see why this bearish pressure we're seeing right now should last, right? And I'll tell you why. I mean, first of all, I don't think that what he said was necessarily bearish. I mean, it was just, I think there was a lot of optimism in the markets about those 2 rate cuts, right? I mean, it was seen as almost certain that we would get those 2 rate cuts, and the entire market was extremely optimistic. The entire market was buying because of that. But I think that was a mistake. And ultimately, I mean, if you go back in time, I mean, Bitcoin right now is holding in the same range as we were also in at the end of August. But that we also got back into when we actually rallied to higher prices back in July. And in July, it was not certain that we would get those rate cuts. Right, and then you're talking about, okay, so here it was not certain that we would get those rate cuts, and the fundamentals were quite good. We had quite a lot of good news here, and the equity markets, stock market was quite good as well. And then now the price is trading lower, and you think, okay, well, are the fundamentals worse or are they better? And I would say they're better. I mean, we have a chance at another rate cut in December. I still think it's over 50%. And then outside of that, we're still getting good developments in the crypto world, and equities have continued to rise. And I mean, purely technically, we just bounced from this fair value gap right here. So ultimately, I think there's a lot of pessimism right now in the markets. And that's fair, right? I mean, the markets have not been amazing, but this looks a little bit more like a liquidation spike, and we might still do something like this, right? I mean, this is certainly a possibility, but ultimately, I think when we're talking about this entire support level between 111,000, where we still have some liquidity, down to 108,000, I think it's most likely that crypto will still bounce from there, and that will still head up to 117.5 and 119,000. And look, I don't care, all right? I mean, if we go up there or not, I don't care, all right? I can make money in both markets, also if we drop down lower. So I'm not telling you that because otherwise I won't make money. No, I'm telling you that because I think objectively that's true, right? I mean, I have no skin in the game, or at least not much. Not enough to say, okay, not enough to care about the price action that much. So I think this is a bit of an overreaction. But let's continue watching. But those are my thoughts here in the middle.
Materially. In the meantime, we see a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly. In any case, it may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances, and so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet,
altcoins
if you
are actually
stop
holding
it,
up relatively
the
well as
runoff
well.
now,
I mean,
does that mean
altcoins are
you
doing
have to
fine.
go
It's
back
really
to actually adding
pushing down a
assets
bit.
sometime next year so that the balance sheet doesn't shrink
Altcoins are
as a
looking better
percent of
than
GDP
Bitcoin,
and
though.
become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow
RVD
organically.
decals.
And because the
It's
size
not
of the
as
balance
dumb,
sheet is
but it's,
frozen, you have further
it's
shrinkage
not as dumb.
in
You're
reserves.
right.
And reserves is
You're
the
right.
thing that we're managing that has to be ample.
Not really.
So that'll happen for a time, but not a tremendously
Stocky,
long time. We
it's a
don't know
possibility.
exactly how long.
It's a
But at a
possibility,
certain
but let's
point,
not talk
you'll
about
want
that
to
too
start
much.
you want to start reserves to start gradually growing to keep up with the size of the banking system and the size of
James
the economy.
Laurie,
So
I
we'll
don't
be
think so
adding
yet. I
reserves
don't think we're
at a
going
certain
into a
point.
bear market yet.
And that's
Maybe
the
next
last
year,
point.
but
Even then,
it's a little early now.
we'll be we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually.
Yeah, bada
I
ding.
don't think you'll notice it in
a lot
market
of coins
conditions.
are holding on relatively well.
But that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look
Boom,
at,
bouncing,
which is PCE inflation.
bouncing.
But we can still
told
make
you.
a pretty good assessment of what that
So
will be.
far.
When we get
Let's not
PPI, there
jinx
might
it.
be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down.
This is
So if you
pretty good
remember,
news. I mean, what
a
he's
couple of
saying
years ago, that's the
is
one
quite
that just
bullish.
we kept
I think,
expecting
at
it to do that. Now it's been
I
doing
think it's
that
not
for some
bad.
time, and we expect to continue that. That leaves the biggest category is services other than housing services.
Boom.
And that's
Oh,
kind
if
of
you
been
watch my
moving
XRP
sideways
You would
over
have been
the
prepared
last
for this.
few months. But
You would
a
have
significant
been
part of
completely
that
prepared for this.
is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal.
This is bullish. This is
So
good
that
news.
we
what
look
he's
at
saying.
that, and
I
the
think
thing
this
about
is good
tariff
news, what he's
inflation
saying.
is the base case
not
is that
bad.
it will come, and
I mean, we basically dumped
probably
because
will
he said
increase
a rate
further.
cut is not
but
certain
it is
in
that
December,
it will be a one-time
which we already
increase.
knew.
And
It
we've
was-
been
it was
very
not fully
focused
priced in, but we
for
already knew.
all of
It's
this year
pretty good what he's saying,
and
to
making
be
sure
fair.
that that's the case.
It's not
and
bad.
thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor. and
Sam
ultimately
Zito in a
manage.
moment.
With the
moment.
stubborn in services inflation, what are some of the things that the Fed could do to address that? And especially when we're seeing potentially labor supply challenges?
Sorry, say that first.
The stubborn services inflation that you mentioned.
Service inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And, overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modest.
It's enough. It's enough. We've listened to enough. I think. Hopefully you agree. Okay. Let me quickly, I'm just checking out some positions. I opened a little bit of a long position on Bitcoin at 109,800 or something. I was a little bit busy for a moment. I thought, okay, I need to long this. And then I longed it with way too high size. So I had to close that order. I had to monitor that a little bit and open a smaller order. But we're good. But ultimately, look, we're going to do a summary in a moment. Let's start off with a summary and then we'll talk about some questions you may have. And then I'm going to eat because I haven't eaten yet. But ultimately, I told you, right? I thought it was a little bit of an overreaction. Ultimately, and no, I need to look at some other business as well. Look, ultimately, one of the key reasons why we actually saw a pullback and why we actually saw bearish pressure quite soon at the start of the session was because he said that a rate cut in December was all but guaranteed, or something like that. I'm paraphrasing, but something like that, right? So that a rate cut in December was not certain. Going into the Federal Reserve Open Market Committee meeting this evening, the probability of a rate cut in December was 85%. So it wasn't certain, all right? It was close to certain, and that's why we saw the pullback, all right? Because all of a sudden he said, oh, it's not certain. So then it probably shifts from 85% to 50%. So that's bearish, or at least that's more bearish than before. So then the market starts pricing that in. But ultimately, I mean, first of all, if you take a look at this move, I mean, look at this. It's beautiful. It's a beautiful move, I think, personally. Like, this is the ideal move you want to see. If it closes like this, I'm not certain if it's going to close like this, of course. But then the other things that he said were actually not that bearish. I mean, he said that they were actually quite bullish about in December stopping quantitative tightening, or at least something that amounts to that, right? Which is good news in terms of monetary policy. He also said that the job market is still is still under pressure, which is also good news, right? Because if the job market is under pressure, they're going to cut rates. And then outside of that, he also said that when we're talking about inflation, there's obviously inflation on goods and there's inflation on services. And what you saw is that inflation on services and inflation on housing, etc., that's actually coming down. And then inflation for goods is going up, but that can be partially explained by tariffs. And whether you agree with tariffs or not, that's logical, right? I mean, if tariffs are being implemented, the prices of goods increase generally. I mean, not always. Sometimes the producer or sometimes the importer also takes some of that hit. But ultimately, someone is going to take that hit, and very often it's customers, so the prices go up. But that is temporary, right? That is temporary. Tariffs are temporary, even though they think that lasts and that will be dispersed over a couple of months. That is temporary. And then the inflation for services is going down. So once the tariff effect is going off of the goods prices, then the inflation will very soon get to their benchmark. And when the inflation is at their benchmark, so towards 2%, and there's still pressure on the job market, they're going to have to cut rates relatively quickly. But of course, I mean, May next year, Jerome Powell is probably gone already, so they're going to cut rates quite aggressively then. But I mean, that entire picture is not bearish, right? That's what I'm trying to say. Like, yes, he said some relatively bearish things, or at least he said some things that are a little bit of a wake-up call. That's what it is. That a rate cut is not guaranteed, but that's it, all right? And then purely structurally, we have a lot of support. So I think it was a bit of an overreaction. Now, I'm going to be a little bit cautious here and a little bit conservative. As some of you know, I am relatively conservative in my trading, in my investing, and I'm going to say that I do think right here around 109,000, the area, I do think we're bottoming there. We could still spike down into the level. We could also create a bullish divergence right here, but ultimately I think we're holding that. Ultimately, I think we're rallying into 114,000. And I still think when we're talking about, going into November, I still think we're going up to 117.5 and 119,000. And those are my thoughts. Those are my thoughts regarding the summary right now. So thank you for watching. Take care, and I'll see you on my next videos. No, I'm kidding. That was just muscle memory for the end of a video, right? Then that's my saying. Okay, let's get to some comments right here. CEC, I would stay away from that. Samzito, it's good now. Okay, the volume is good. I know I had to talk a little bit louder, but right now it's good. CME gap filled. Indeed, you can see CME gap is filled right here. CME gap, the bottom of that is at 110,700. Scared to be, CEC is a little bit late, I think. It's a little late. Hedera. Yeah, how's Hedera doing? I think Hedera, I'm going to stick to the higher time frames. Hedera is a little bit tricky. If Hedera is able to reclaim 20 cents, I think we're good. And I think we can get some more bullish price action. Right now, it's a little bit it's tricky. It's not something I would be very interested in trading or buying right now. I actually had a position on Hedera, but it closed at entry today, as some of you might know, because there was a signal as well. Yeah, Alderano, those sniffles are gone. I'm not sure what happens, but to be fair, at some point of time in the summer, they just weren't there anymore, which is great news. But okay, yeah, I mean the volume is incredibly high right now. There's not, I mean, when we're talking about the price action right now, the entire market is quite correlated. There's not one coin that I think is very strong right now. To be fair, Hedera is quite good. Fetch is doing good, but it also hasn't broken out. Do we have something with a lot of volume, with a lot of momentum? Yeah, CEC is still quite strong, but it's difficult to trade that. BitTensor I still think is that's actually bouncing relatively well right here. I mean, if you take a look at this, you'd say nothing happened, right? That's the funny thing about it. Look, XRP. I'm pretty glad with the move that XRP made, because this is what we predicted, right? I mean, I think in the video I said something like a spike down into 2.55 and 2.5 or something. XRP looks good. I do think that it's possible, similar to what I said on Bitcoin, that XRP makes some sort of a bullish divergence here, and that we will spike down into 2.5 still. But ultimately, the price action for XRP since last week Friday has actually been quite exceptional. I would even call that, and I would still expect something like this for XRP. But I'll think about that a little bit more, and we'll talk about that. We'll talk about that in the video tomorrow morning as well. Yeah, Ethereum is weak. Ethereum is weak. I would, if you're interested in Ethereum, I would just set a price alert at 4,150 and forget about it, and just wait for that. Ethereum is not a coin right now that I'd be trading. It's weak compared to the rest of the market, and you want to trade strength, right? At least if you're buying. If you're longing, you want to buy strength. James Laurie, back into the bear market. It's hard to say. I think Bitcoin will maybe get one bear market, but that's going to be extremely harsh. But outside of that, I think Bitcoin, for the majority of the time when we're looking at the next couple of years, will just be up and down. I think Bitcoin is more and more correlated and in sync with the general financial markets, and general financial markets, trend up, they trend down, but you don't have those cycles. I don't believe in cycles anymore. At least not for Bitcoin. For altcoins, I also don't believe in the traditional cycles anymore. It's just it's something of the past. I think the entire market has become quite synced in with the general financial markets. And when we're talking about those traditional altcoin cycles, I think that has been invalidated already since 2024. To be fair, so if I would have to say for altcoins, I think to a certain extent we are like certain altcoins right now are in a bear market and certain are in a bull market. That's the way I look at it right now. And that's, I think, the best way to go about it as well, and the best way, the best framework to make the best decisions in regards to investing and trading. Personally, I barely have any coins that I would be comfortable investing in long term. Like over the course of the summer, I held Solana for like 2 months. Like that is something I will do. But holding it for years, like buying something and saying, okay, this altcoin in 5 years it's going to be great, I don't believe in that anymore, unfortunately. But okay. I think we're going to cut the stream, guys. I have to eat something, otherwise I will fall off my graad. We have to watch some election. It's election day right now in the Netherlands. So it's going to be interesting to see the exit polls. It's quite an important election, to be fair. So it's going to be interesting to see who wins and if there's any surprises. It's quite likely we're going to get some surprises. And ultimately, like I said, for those of you tuning in later, my apologies that you're tuning in at the end of the live stream. It was great fun as always. But we got a rate cut, and then the press conference started quite bearish. That's why we had to spike down on Bitcoin. But throughout that, altcoins were actually able to hold relatively well. And we also got some good news after that. So I think ultimately we are bottoming around the spike we had. And I do think from there we'll be able to get a move into 114,000. Although I would be, to end the stream, I would be careful trading post FOMC. It's always difficult market circumstances, just so you know. But that's it for now. Thank you for watching, everybody. Thank you for being here. I'll be back with new videos tomorrow. Just the normal videos. I'll look at what's interesting to cover tomorrow in terms of altcoins. But that's it. I'll be back with a middle of the day market update as well. So yeah, and for those of you who are interested in that, I mean, as you can see, I always use rolling VWAPs in my videos. I'm currently coding some indicators myself. I'm very novel at that. But if you join the Signal group right now, outside of getting my trades, of course, and outside of getting my trading guides in which I explain my main strategy, or at least the idea behind my main strategy, you also get that indicator. So if you're interested in that, check that out. Links are down in the description. But now I'm done with the promo. Thank you, everybody.